Hello and welcome to Fintech Impact. I'm your host, Jason Pereira. Before we get started today, just a quick reminder. Feel free to reach out with any suggestions for companies I should be interviewing, topics you'd like to see. If you'd like to see another episode like our recent panel discussion on tech titans and fintech, let me know what you think would be of interest and who might be a good candidate. I always love hearing from my listeners and happy to have that conversation. So on today's show. Today's show, I have a bit of a different one for you. I have Jill Earthy of Female Funders. Female Funders is an organization that helps coach and educate women on making private investments in venture capital startups and private equity deals. And with that, here's my interview with Jill. Good afternoon, Jill.
Good afternoon, Jason.
Thanks for taking the time today.
Yeah, it's great to be here.
Yes. Well, we're in your offices, so it's good for me to be here. So we work, so great for all of us to be here. So Jill Earthy, Female Funders, tell us about Female Funders.
Yeah, absolutely. Well, Female Funders is an education program for female leaders across North America from different sectors who have a curiosity about investing through angel investing or in the venture capital space for two applications. One, because they personally want to invest in the next stage of company that's shaping the future. And two, for professional development reasons where they're making decisions within larger organizations, looking at innovation. And it's a great tool to understand the ecosystem in a different way.
So both as individual investors and strategic investors, essentially.
Yes.
Okay. So what was the genesis of this? Where did it come about?
Yeah, it actually started about a couple of years ago. A woman, Catherine Haig, who had been an entrepreneur who'd built a business, who had experienced an exit. But while she was building the company, she had a difficult time accessing capital.
Is this gender bias we're talking about here? Or
yeah, it's coming into play. It's coming into play. I mean, there are lots of factors baked into those types of conversations. But at the end of the day, that's what she identified, that she felt that she wasn't accessing capital because she was a woman.
Well, I mean, this is a common refrain. It's been a known issue in the Valley. I've heard it from several founders myself, and even had one say that she specifically brings along a male programmer at all times so that they think that he's an executive and that he's making decisions, which is just, what year am I in that this is a problem? You know?
Right. Well, you look at the data too, right? 2.2% of venture capital going to women founders.
That bad, 2.2%.
2.2%. But then you look at
that may as well be zero. It's so small.
But let's turn it around and look at the opportunity, because we're also we know that actually after 5 years, women-led businesses, there's 20% more revenue growth. So
take that 2.2%.
Right? The returns are significant, are higher, maybe over a longer time period for businesses with diverse founders. But we're seeing like the data shows that, investing in diverse teams, investing in women founders is good.
I think it may just be, it's partially due to the fact that I think that it's that much harder. You got to be that much better. So maybe only the best ideas ever get that. And you know what? Maybe if we get to 50-50, it's even, and that's fine. I'm happy to live like that. But it is what it is. Like at the end of the day, there's still I'm sorry, but women do not account for 2.2% of all the ideas.
Exactly. Yeah. But also you look at the system right now, right? And so maybe there's a different way to look at that too, right? It wasn't designed for everybody. And so there's a huge economic opportunity if we look at that differently and it is about diversity. It's about inclusion. It's about having everybody at the table and unlocking new capital, new expertise to support different types of companies that benefit us all.
So tell me about like every path of the journey here. So where are these female funders coming from in the first place?
Yeah, so we have three sort of personas, if you will. So we have women who are senior leaders within large organizations. So it could be financial institutions, could be professional services organizations, could be consumer packaged goods. And they're recognizing, or their organizations are recognizing too, that there's a need to innovate. There's a need to think differently. You look at, we know in Canada that 98% of businesses is small. The technology is shaping everything. And so there's a desire, as large organizations are shifting, to understand that ecosystem and how they can play, how they can lead in that, I should say. So we have a lot of women who want to understand that for professional development, but also, of course, they're looking at going, hey, can I invest in the next, one of these, the big companies like that have had a win. Sorry. And then there's two others. I'll keep going.
Keep going.
The other is technology leaders. So those who are in companies like Amazon, Facebook, Shopify, who have seen growth internally and want to participate.
Exits,
Exactly. And then the third are entrepreneurs themselves who have grown businesses to a certain stage and who want to participate. But then the other big, of course, wealth management. That's a whole nother sector too, where we're seeing both individuals within the wealth management sector or those who have obviously clients. The clients want to be educated.
That's a big challenge though, right? Like regulatorily, that is not an easy nut to crack.
No, for sure. But there's changes happening there too, which will make it a little bit easier.
Oh, you're alluding to something.
Tax incentives, all sorts of different things too.
She's saying. So that's where they come from. Tell me about the education piece once they arrive.
Yeah. Well, and I think we've designed a program that's very collaborative. So we work with cohorts, so groups of women coming together from different sectors. And that's, of course, you want to learn and understand from each other too and bring different perspectives to the table. So we cover topics. We have 4 online learning modules, accessible, of course, by mobile device, covering everything from the overall landscape of the investing landscape, more focused on venture capital and angel investing. But it's also part of, like, as you're developing your overall portfolio, it's a piece of it. We cover a lot of that. We look at then how do you find these opportunities, right? And then, of course, once you find something, how do you assess it and tools around that? The deal mechanics, so the technical elements, the types of securities, the pros and cons of each from an investor side, from a founder side, looking at that, the regulatory landscape, how does that fit in? So certain tax incentives, things like that. So understanding those pieces. And then what's your plan? How do you develop an actual roadmap for yourself based on your own filters, your own interests, and therefore your own investment thesis? So we cover that. Office hours with male and female investor mentors, of course, participating, sharing their expertise and bringing the groups together. And then wrapped around all that, we do a lot of different things. Investment learning labs, where we bring all of our different cohorts together to learn across each other, investor mentors, and we showcase different opportunities. So it's an active learning opportunity to explore together.
So it's interesting because, I mean, to my experience, when most people are like, oh, I want to get into this, it's like literally they just want to throw money at stuff is the common refrain I see, right? Like all of this that you're talking about, which is fundamentally awesome.
But high risk.
High risk. But because we had in this, I just feel like people don't understand risk in this world.
Right.
All of this education you're providing, which is fantastic. Like, did this come about? What's the reason for this to come about to bridge the gap? Was this like I hate to sound gender biased with this statement, but is it out of like a gender-based fear or stereotypical gender-based fear of getting into this realm because it's male-dominated? Like, where's it coming from?
I wouldn't label it as a fear, but I think it comes down to, for us, women tend to be more risk astute. And I use that term because we look at
all the data supports that. You guys are better risk mitigators, better risk selectors.
We want to understand. We want to have an environment where we can ask questions, where we can access the information that we need. We want experts. We want to collaborate. So that's the environment that we're creating, is very much that pathway. So that bridge, and also create the networks, right? Because deal flow doesn't just...
No, it doesn't just appear.
It doesn't appear.
Sometimes you have to host podcasts.
Exactly. So curating that as well. I mean, ultimately, we don't want to have a female-focused program. No. We would like it to be equality. So we have some catching up to do. And women, and I'm lumping obviously myself into, or those who identify as women, want to learn in a different way. So that's a big part of it. But you're absolutely right. As a result of that sort of a risk astuteness and wanting to learn and understand before writing a check, that results in better investment decisions.
Previous to your comment about the general nature of the structure of the industry in general, and again, my comment about when these people first start coming to me and talking about this, or they get the one deal they get approached for, it's like suddenly like, this is what I should be doing. I should just be like cutting checks, and there's a bit of a bravado that goes with that. It's definitely not what I would expect from the fairer sex, quite honestly. So I think that frankly, it's a much more stewarded, smart way to go about it.
Well, and you think about the power within organizations, within even syndicates or groups of investors, and you have that diversity of thought and perspective, right? Some who are more risk, let's just do it. And then others saying, hey, wait a second, let's think about that. Well, the decision at the end of that day is going to be way more powerful.
So are these people free to make their own decisions, or is this like an angel pool? Like, how is this where you're laughing? So both ways?
No, I'm laughing at it because the free to make your own decisions.
Well, when I say that, no, is it a pool that they basically all throw money in and they all get a vote on, or are they still making their own individual decisions as part of
great question. So at the end of the program, or even alongside the program, right, is they're going, okay, now, because it's like anything, you decide to buy a certain type of car and suddenly you look around and everybody has it. Everybody has it. So as soon as you start to identify as interested in these types of investments, and it is amazing how, things happen. You bring it up at dinner party, you bring it up wherever, and things start to happen.
Everybody just happens to be starting this.
So very much we do try to curate different opportunities, and whether it's larger funds that they wouldn't necessarily otherwise have access to, or whether it's presenting different types of companies that they may be interested in. So part of that last part of the program around the investment thesis is for us to also understand the interests and needs, because a lot of our participants also have expertise that they want to share, right? So how can we best match them up with opportunities that will align with their expertise and their capital? So we definitely matchmake a bit, but of course, they're going to see other things. And because we're North American wide, right? Some want to invest in, locally in their own communities, and we'll coordinate that with some of the angel capital organizations that fit too, or just where, accelerators or incubators, that sort of thing.
Yeah.
So yes, so some of them, depending on their goals at the end of the program, will just go for it and they'll just connect in their networks, or they'll also create a portfolio approach, right? And say, hey, I want a portion of what I'm going to allocate in this next year is going to go to fund, and then others I'm going to do in direct
investment. Call my own shots on that one.
Yeah, and then because that's a way to learn and obviously mitigate risk.
Mitigate risk. Yeah.
But on the other hand, these two companies look awesome. Yep. I'm going to do deeper due diligence on these. They're probably going to partner with some people, especially for the first couple investments. We highly recommend that. Yes. With some of the more experienced investors, and shadow and follow along. And so yes, we help facilitate that. So
tell me about the deal flow. So where are these potential deals all coming from, other than the cocktail parties we just referenced?
Yeah. I mean, we have a broad ecosystem, right? Certainly in Canada. And Canada, North America, primarily. Where
the podcast, all over the place.
All over the place.
I'd say it's, it comes up all the time. It's probably about 80% Canada, US.
Okay.
And then for some reason I get spikes in random countries. But yeah, it's Australia, UK, all over Europe, Israel.
Great. Okay, amazing. Yeah. So, I mean, the innovation ecosystems are alive in all of those countries, lots of activities. So part of what we do is, we connect in based on their interests. Right now, there's like health tech and ed tech and biotech and fintech and clean tech, right? I mean, soon that tech word is just going to be dropped because technology is everywhere, which is great.
Can't remember who said there's no such thing as a tech company in the future. You're either a tech company or dead.
Yeah, exactly. Yeah. Exactly. Yeah. So it's identifying based on your goals, where are the right resources, right? Yeah. And it does come from networks or participating in certain events or things in the community. There's also different platforms now where you can access deal flow, whether it's, Angel List or other online investment platforms or Fund Funder or different things. So it's, so we definitely sort of help to guide that because there's also a lot of noise. There's a lot of activity and noise, and
or the people who think that just because they hear of a company call with me, like, I'm going to invest in you, it's like, go, I don't know who you are.
Exactly.
Maybe it's Series A, talk to this person.
That's
if you're
right.
lucky. Yeah,
understanding industry, stage. Yeah. Some people really like investing in super early, pre-revenue companies. Well, that's a whole different ballgame. Or putting some in. Others want to, later stage, like Series A.
You're going to exit in 6 months. Yes.
Yeah. All those things. So so it's figuring out the plan around that.
Good. So basically, how much deal flow have you seen thus far?
So we just really launched the program though last summer. Okay. So summer of 2018. So we've had 4 groups go through the program. We are seeing checks being written. We have no shortage of deal flow. It's how do we curate that, close ratios. We are seeing more of that. An example would be, we had one company present recently, a robotics company. One of our investor mentors who was guiding the discussion has decided to do deeper due diligence into that company and offered it to some other members within the community. They are shadowing that due diligence process to learn. They will probably likely invest in alongside her. So that's a powerful example. Others are seeing things in their own communities. They're using their investor mentors as guides and are starting to write checks. And some checks, and I think this is a key piece, are small to start, right? Could be 5,000, could be 10,000 to start.
Yeah, especially pre-revenue stages.
In the early stage, and it's about, that portfolio approach, but it's starting to do something, right? So I think that's the key piece, right? We often, I think all of us identify investors as, certainly in early stage companies as writing $1 million checks, and it can start somewhere, right? Yep. And start to learn and take that next step.
So what surprised you about this entire process that you didn't think would come out of it? Like something that, you would have been like, well, I never thought we would have ended up in this place.
It's an interesting question.
Usually I save those for the end, but.
Yeah. I mean, I've been doing a lot of this work and in this space for a long time. I've taken a personal interest in investing as of about in this type of asset class, probably about 4 years ago. So surprises, I don't think this is a surprise, but I would say there's more and more data, recognizing the importance of this. So, or not recognizing, demonstrating and demonstrating. And then I think the other key piece is just even the data around, innovation within organizations, right? And that role too, right?
Yeah,
so it
5
goes
guys
beyond,
who look the same aren't going to be able to meet everybody's needs.
Yeah, and it's exactly. And it's the small startups that are getting going, and those are going to drive the economy in a certain way, but we need the corporates too to participate. And so that connection between the two, I think there's there's a lot of opportunity there. And so I think that's something maybe I hadn't really seen as much previously. And I think that's maybe a result of, well, those larger corporations realizing that they need to get moving on some of this and integrate innovation and connect with the entrepreneurial ecosystem in different ways. And there's data that supports that.
How much of the deals are you seeing are earlier versus late stage?
I mean, because of the stage and the size of the investors, it's definitely earlier stage.
Yeah, I was going to say, you're not going to be able to participate in large, like Series C, B or C rounds, right? Yeah.
No, not at this stage. But I think the other part of it, some of the participants in our program have an interest in going into venture capital. So some of them will start their own funds. Some of them will join VC funds.
That's rather ambitious. I'm going to start my own fund. Well,
you know what? It's happening.
Yeah, I know it's happening.
It's not, you have to, it takes a lot of work, but there's more opportunity to do that. And we'll see those. We'll see. It's
funny because, you hear these numbers and they sound relatively small when we're talking about them, but the entire VC industry in general is a cottage industry in the grand scheme of things. So it can be a small cottage of the cottage industry together.
Absolutely.
Pretty easily.
Well, yeah, the media sort of
they make it
to
sound
amplify
like
it's
it's the old when I teach, it's like, stock market versus bond market. Which one do you think is better? No one ever says bond market. It's like, no, the stock market's like a tick on the back of the bull that is the bond market, right? And it's like the VC market is like the molecule sitting on the back of that tick.
Absolutely.
Like it's just,
it's all perspective, right?
Well, yeah. I mean, it's all it's all the oh my God, can you believe it's all these people made this money that quickly? And it's like, okay, what about the graveyard of people who lost money? And like it's all a flash, right? The media, it's always everybody's either going broke or getting rich. There's no in between.
Well, and that's what we need to change, right? We need to, because I think there are different ways. Like it's not all about the unicorns. It's about the
decacorns,
the majority of the companies.
Exactly. I've had an exit already myself, and it was not a unicorn, but it did very nicely for me.
Yeah, I have too. You get to the next stage.
Like, that was a nice paycheck.
But then you move on.
Yeah, exactly. So in terms of the attitudes of people coming into this program, how do you think that they've evolved? Did they come in expecting something completely different and mature into something that someone that understood this? Was like a lot of what were the misconceptions in general?
You know what? Yeah, great questions, Jason. I would say the people coming into the program, I mean, they've sort of self-identified that they want to take this next step, that they recognize the value in that. Now, some of them have deep finance backgrounds. Some are securities lawyers. So they have or they're, in senior leadership roles. They have deep expertise. What they haven't quite realized or don't feel in themselves that they have the full knowledge of the landscape and even some of the language and lingo and those types of pieces, right? So
conscious incompetence. They're at that stage. So that's good.
So this, I mean, we're just connecting the dots, right? And demystifying part of the process. And a lot of the things and terms and most of our participants are familiar with, but it's kind of putting them together in a context, in a story that makes sense, and then giving them a pathway to take action.
Honestly, I'm listening to this entire thing. I keep thinking to myself, and I'm going to denigrate my own gender with this one, but I keep thinking if I tried to do the same thing, the number of yahoos that we get in no time, they're like, oh no, that's, this is how you do things, and here's a check, and it's unfortunately male stereotypes exist for a reason sometimes. But so to date, what kind of growth have you seen? It's only been a year. Is this kind of following the path you thought it would?
Yeah, I mean, in a way, you can consider that we're a bit of a startup, right? So we've validated the
nesting doll. So
validated the product.
Yeah.
There's a significant market, all of those things. We're ramping up. We're seeing action. Like success for us is seeing more women participate as writing checks and influencing investment decisions. That's success. We're seeing that happen. We're now scaling up to serve many more people. I mean, our goal is just thousands of female leaders each year. So and beyond. So we'll have another 100 go through the program this fall. And thousands in 2020.
Fantastic. That's all well and good. Now, help me understand where your revenue sources come from and how you fund this entire thing. Yeah.
Well, we partner with a lot of different organizations. Participants do pay a fee for the program, and it's for a 12-month experience and saving them time and expediting their learning. So they pay a fee. We work with a number of corporations who are investing in our program to support their female leaders to drive their bottom line, right? So they're framing a partnership with us. And then we will, as our next phase, we'll have an ongoing sort of membership component because we also have more experienced investors coming to us saying, hey, I want access. I don't necessarily need the education, but I want access to the community and the deal flow. So we'll see part of that roll out. And then there's a lot of new opportunities too, just around some of that curation of deal flow and pieces where we're looking at developing a further business model around it. So Fantastic. Right now, not super complicated, but
And what's the feedback been in general?
That you asked me about surprises earlier. Not that I should be surprised, but you want to be pleasantly surprised. The feedback has been phenomenal. The women going through the program are so committed. They're so engaged. And of course, they're our best champions and ambassadors.
Satisfied customers always is.
That's the key. Yeah. That's the key. That's what we live for. So it's good.
Excellent. So it means it's a diverse and wonderful initiative. And frankly, I applaud it. What are your larger ambitions for this? You say thousands. So you want to roll this out. Is this something that's going to stay regional? You want to move it national, internationally? What are your larger grand scheme visions for this?
Yeah. Well, we're currently serving North America. So we have participants from Chicago, New York, San Francisco, Colorado, Halifax, Toronto, Calgary, Vancouver. So we have ambitions. We get actually almost weekly, we get people reaching out from Sweden, Australia, Mexico, UK, and other countries in Asia. So it's amazing. So we definitely see the way that the program is designed right now as primarily an online experience.
I was going to say,
some offline components.
Yeah, given that. Yeah. So, and it's again, the things we can do now that we couldn't do before to have that kind of collaboration happening in a non-physical environment would have been incredibly difficult 20 years ago, right?
Yeah, but I think it's important to note too, although the majority of it is online, we also host a lot of in-person gatherings in a curated way so that the different participants can connect with each
absolutely.
other.
I mean, I think when you're going to do something as intimate as cutting a check to someone with your life savings, you want to kind of look them in the eye and get a sense for the kind of person they are, right? Yeah. There's still a soft side to all this, regardless of the analysis.
Yeah, exactly. Yeah. And then the last thing I would just say is that, success for us looks like, so I mentioned that 2.2% of venture capital goes to women entrepreneurs. When you look at the representation of investors, so in Canada, 17% of angel investors are women. It's slightly higher in the US, a little bit over 20%. We recently released a report, the Women in Venture report, which was looking at the landscape in North America. And
how much do they kick our butts? Let me know.
Yeah, well 15%. And venture capital sort of fund managers are women. And then it's 13% of those in corporate venture capital. So the institutions themselves are not recognizing the change or need as fast. Yeah, but then you look at the opportunity, right?
Absolutely.
So we can unlock that and shift those numbers. So that's what success looks like.
Absolutely. So before we wrap up, 3 questions. The first one is, if you had one wish for something you could change in your organization, the industry as a whole, whatever it is, what would that be?
Can I say gender equity? Let's just...
By all means.
Okay.
Yeah, gender equity.
Let's do it.
Yeah, no, I agree. I think it's an idea that sadly is well past its time, becoming more and more to fruition.
Well, and we need to go beyond gender too, but that's a starting point because it is about, it's diversity of perspectives.
That's it, and respecting that. And okay, so the second one was, what's the biggest challenge you encountered that you didn't see coming when you started this?
Opportunity. Like, how do you define, it is like the traditional entrepreneurial challenge, right? The bright, shiny object syndrome. So, let's go over here. Let's go right. Exactly. Yeah. And we have so many opportunities and so many things that we want to do. So it's just, scaling up to be able to service all of that.
Fantastic. And the last question is, what gets you up in the morning and inspires you to keep doing what you're doing and press on?
Progress. Yeah. So the opportunity to have conversations like this and to work with the people that I get to work with, both the men and women, to make this change. I mean, I'm in a fortunate position. I've had a winding path of a career like many people, and all roads have led here, and it's pretty powerful.
Fantastic. Well, thank you very much, both for your time and for your time in this initiative. I think it's very valuable, and I think I think hopefully you'll get some people. I'm not sure. I actually don't know what the gender breakdown of my podcast is. Now you have to send out a survey.
It's men and women working together.
I know, but now I'm wondering. I've only had the men reach out. Women, if you're listening, none of you have ever bugged me for anything. So by all means, feel free. You're not bothering. So thank you yet again.
Yeah, thank you.
All right, take care. So I hope you enjoyed that interview with Jill. Like I said, it was a different kind of message, but I think a very important one. And with that, as always, I am Jason Pereira, and this has been Fintech Impact. I hope you enjoy the podcast. And if you did, please leave a review on iTunes, Stitcher, or whatever's your podcasts. Until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at fintechimpact.co.